Gold has been trending higher over the last few days as it pushes on back towards the highs achieved over the summer, but once again it is falling short around that key 1530, 1535 level. You'll remember that this is the level which it peaked at on the way up early on in August, and what this leaves us is in a position whereby a break of this level to the upside all of a sudden starts to make the yellow metal look a lot more bullish and suddenly brings that 1560 level back into view. But as we've seen over the past couple of weeks, this is a market that has looked as though it has been prone for something of a correction. We have seen a partial correction so far. We've seen it drop back towards those kind of 1480 levels, but we still haven't seen a broad correction given just how strong the rally was over the course of the summer months. So the question is, do we see a break above that 1535 level and a move back towards those highs and potential new multi-year highs in gold, or are we peaking around these levels and are we potentially in the midst of a head and shoulders setup on this gold daily chart? Well, at this moment in time, we have found resistance around 1535 and we've seen a 3 or 4 day rally which has come to an abrupt end. If we continue to hold around these levels and start to edge lower, then that's going to shine a light back on those 1480 levels. These are the two key levels in gold at this moment in time. In terms of what's spurring gold higher, over the last 24 hours in particular, we have seen the impeachment proceedings come back to the fore again. This did hit the dollar in US trade overnight. It also hit US equity markets with risk appetite taking a hit on the back of this news. While we don't know how much further this will go, and it still seems extremely unlikely that the Senate will back an impeachment of the president coming as we're heading into an election year, it could be enough to smear the president to the point that it starts to make the polls a lot more interesting. And I think that's what's really playing into the risk appetite in the markets right now. There is also the unexpected nature of the report itself, which again lends itself to this kind of negative knee-jerk reaction which we have seen in the markets, particularly in equity markets and the US dollar. But both of these factors do typically favour the safe havens, and gold is the ultimate safe haven that very much benefits in particular when we are seeing a softer greenback. And that's what we saw that last leg higher in gold overnight. But again, what really matters now is where we go from here. 1535, a massive level to the upside. 1480, a massive level to the downside. If we do see that 1480 tested again, I think we will see considerable pressure now on that support level. It's held up until now at a few times of asking. Whether it can hold again remains to be seen. If we do see a break of 1480, that would indicate a much broader correction is on the cards. In terms of what lies next for gold, there's two very clear levels of potential support below. The first one is 1450. That's where we've run into some resistance before on the way up during that rally. Below there, around 1400, starts to look extremely interesting. The reason why these levels are so interesting is because of that head and shoulders setup by the textbooks in these head and shoulders patterns. They do give us a possible price projection due to the size of this topping formation, and based on the size of that topping formation between 1480 and 1560, that gives us a possible price projection of around $80, and that takes us from 1480 through to 1400. Of course, these things are never guaranteed and these are only possible price projections, but that does highlight this once again as an area of interest, aside from the fact that this of course has been quite a key area of interest in the past. So 1480, a break of this would be quite considerable and could be the catalyst for a sharper deterioration in the gold price.